So let's go to, in another video, we have a theoretical part of what yield farming is, where all the theory is displayed. Now I will give you a quick highlights on top of what yield farming is. This is the main topic of our coaching today, and we will be talking about how yield farming can help us earn more money. So let's switch to a practical part, to highlights of the theoretical part, and then we'll dive deeper into practical part. So what is a decentralized finance in terms of yield farming? It's a very interesting topic and it's quite big. I'll give you the definitions on the go so that you can be sure what it is. So yield farming, it's also called liquidity farming, is a practice of staking and locking up the cryptocurrencies in return for rewards. So this is a certain manipulations with lending protocols or borrowing or staking that gives us the rewards. So this is something not something new to give the rewards, but the concept of yield farming has risen from decentralized finance sector because it has never been possible to do like that. So I'm looking at it as an instrument that lets earn money with manipulations, with positive manipulations, with the liquidity, and getting more profit in the end. So in simple words, when you do lending, when you do borrowing, you earn a third token, for example, in addition to commission or typical types of income. And this third token is a currency that you can do anything with. So you can go to another protocol and stake it or deposit it and give your income, and you can do whatever with those tokens. So please do not mix up holding with yield farming, because holding is a long-term keeping of the funds. So this has nothing similar with it. Yield farming is a manipulation and succession of actions so that to get more profit out of the funds we have. So imagine yourself in a real world, in the real classical trading world, when you have, even if you have enough money, if you have much money and you want to produce some financial institution to grow your funds, to get more money out of your money, you need to have instruments like banks, like exchanges, like holdings, like IPOs or whatever, big companies, lots of paper, lots of organizations, lots of taxes. But decentralized world gives us this opportunity so that we could have our own possibility, own instrument to grow more money, to encounter the risks and to analyze the risk and avoid them, of course, so that we could be a sort of bankers. So in simple words, you can be a bank owner who can manipulate and do a lot of transactions to get more money out of them. So this is an interesting sphere and interesting field for growing your skills, not only money, and growing your intelligence. So this is very interesting. So let's go back to theory. What types of yield we have? So we have fees when you, for example, fill in or invest into the lending into the pool. So you invest into the pool and you get your commission for the trade. For example, in Uniswap you have 1.3 percentage for the whole liquidity pool provider. So, for example, if you have 50% of the liquidity pool, you get 1.2 or 1.5 from every transaction as part of the commission. So this is a sort of fair distribution of money. So you get fees. In real world, only banks have those fees for the transactions, and people, just individuals, can't join this market. The second, as I told you, when you do your transactions or do lending or borrowing, you can get governance token, and these tokens can be rated high by the market, despite the creators, the developers don't plan it. For example, this happened with iEarn token or YEI token, which was very highly rated by the community, and became is a simple governance token for voting in a decentralized atomic organization. But in fact it turned out to be one of the expensive DeFi tokens in the industry. And reward token, of course, you get rewards for doing this or that. It's something similar to airdrop, so to say. So you had this you have this understanding, but when you get a reward, of course, you can do whatever you want with this token. So ways to earn. Let's summarize the theory. We do earn our money from lending and borrowing. So in terms of fees, we invest to liquidity pools and get some commissions out of them, as we have a sort of share in the liquidity pool. In the banks, in normal world, we people can't invest to the bank. I don't think I'm not speaking about shares, but in the turnover over the bank, they can't invest. But here in the DeFi protocol, everyone can through his DeFi wallet. And reward of the tokens. Those are three types of rewards that people can have. And of course, we need to understand the sort of risks we have, and smart contracts themselves, they are risk, because smart contract can be an issue. Then exchange rates can change, of course, and they can fluctuate. We know that the market is very volatile, and if your collateral is cryptocurrency, and its rate can be changed, so you need to provide enough collateral and to deposit more to provide enough collateral, so that your lending contract could not be liquidated or sold out. So the platform, we need to be careful with the platforms themselves. I recommend to use the platforms only in top 10 of DeFi Pulse or CoinMarketCap lists. So they, of course, have audits, and they cannot be easily hacked. Of course, this is a certain degree of safety that we should follow and should encounter when we are doing our investments. And of course, the fifth risk is general for the whole industry. It's black swan risk. If anything extraordinary happens, for example, like SEC, for example, commission that is following with tether emittent for USDT. So this can be a risk. If something happens between them, some USDT can be blocked. We know about that. we bear that in mind, and we don't keep much money on USDT. So as part of our recommendation. So these are the risks, and of course, like in the whole cryptocurrency as an industry, you need to take the risks on your own and to estimate them yourself. So these are the risks. So let's go to a more practical part, which going to be very interesting, and I want to share with you the key link that needs to be on your computers when you try to earn more money on yield farming. So this is CoinMarketCap section for yield farming, which is dedicated to yield farming. And we have the list of projects that coming over the market pairs, and we can see the indicators. So let's go to the section of highest APYs. These are annual percentage yields. From the theoretical part, you know that those indicators in percentage are compound, and they are quite flexible. They're changing depending on the current situation. So today it can be crazy, 1000%, but further on tomorrow it can drop down to lower indicators. So let's look at the statistics. So we have reward type. This is the coin which is given as a reward to everyone who does any transactions for lending. Of course, impermanent loss is quite high, and the percentage are very crazy. Is very crazy here, and we see that 30% a day. That's really crazy. And of course, you understand, like sensible people, that you have much risks in getting those percent. Your risk is too high. So what we do, we dive into the market pair. In the market pair, we see in the link that this is not active. So that means that this pair is not relevant. So this data is outdated. I think many people wanted to earn 11,000% or 30% daily, and this pair is not relevant anymore. This data is incorrect. So we go to another pancake swap protocol and see another pair. So it's also inactive. You see, this is not active, but we need to be experienced on practical side. If we go to that protocol, we can see that their pairs are quite, their trading pairs are quite interesting. So we have the same menu like in all decentralized exchange. So let's go to the farms, and farms wise, so that to earn cake coin, we see that these rates are too high, and to be honest, I don't really trust those coins, and I would not recommend my people to earn, because I need to. The risk is very high. This is visible not only from the coins, but this is visible from the whole project. It is not that popular, and it is not well known. The community is not supporting it. So, but it can only be a startup. The same if we scroll down. If we scroll down and see, at least I would say that I prefer to look at the type of protocols which I know. For example, I know mstable. Let's see if it works. It didn't work previously. So I see that it is more reliable. Of course, the yearly APY, annual percentage yield, is lower. Here it's 91%, which is more rational, so to say. It's not working, and stable is not working. But at least I see the protocols which are on top 20 at least, but preferably top 10. So and the 49th is UMA Ethereum. So I know the coins, I know the protocol Sushi, which is quite famous, and we need to unlock wallet, so to connect and to see what it offers. So it may offer many. I will not connect now, but you can do that, and we can see those statistics. We need to check those statistics if they really have that. That statistic is that correct or not, and to see a yearly rate, yearly yield, or for this pair. So I would look at it as a potential for investing, to be honest. So this is my recommendation. So Yawn protocol is very famous. They are just so to say investing for TUSD, and the yearly percentage is quite high as well. So it's 32 yearly rate. So this is the key link and the key page on CoinMarketCap. If you want to invest to yield farming protocol. So I would do something with Sushi, to be honest. So in my opinion, and to see what's the best option to invest. Then another important resource is CoinGecko.com. So we have lots of assets which are being used for yield farming, and we see the statistics and the data. So collateral is the coin which is collateralized. It can be a pair if it's a trading pair, and we can see how profitable they are. So of course the most profitables are the most risky. They even don't give the risk level here, to be honest. And if we go to the protocols which are less risky, so they are quite different. So let's sort out by risk. So they don't give it. But it's another data which you can use to check the liquidity if you are planning to do something as your yield farming transaction. So please follow the statistics.